Good morning, America. The markets will open in approximately 4 minutes. It's come to my attention today, although it did linger yesterday, that we will have a holiday, an unannounced holiday, well, not that unannounced, on Thursday. In memorial of Jimmy Carter. Do you know that? I remember Jimmy Carter. I don't know why I remember Jimmy Carter, but I was very young, and so I'm born in 1969, and I believe Jimmy Carter was president in 1974 to 78. When was Jimmy Carter president? No, 1977. So anyway, so that's maybe why I remember him. Otherwise, I would have remembered him as a 4-year-old. But I remember him because I think someone told me he grew peanuts. So it's the stranger things that we remember. Anyway, I hope you're well, all of you. I see here that I had muted the Telegram, but that has now been fixed. Also 1981. No, he was a one-term president, and he was superseded by Ronald Reagan. And I believe Ronald Reagan was the one that introduced a different kind of economic policy, and that paved the way for the 1980s bull market. At least if my economic history is right. Anyway, so here we are. I have got some lessons with me today as well. What I want to do is I want to do a review of yesterday. Here we go. Review USA. So I want to go through the Dow as well as the Nasdaq. But I think we'll wait just a little bit, just get my bearings. There's a gentleman that has chipped in just moments ago. He said his name is Black Swan. It's probably not his name. He says, Jimmy Carter, point of notice, price of peanuts doubled and tripled during his presidency. I say, that's a little bit of trivia for you. I don't know whether it's true or not, but Black Swan says so. Anyway, here we are. And we are 1 minute away from the open. And here's the account that I'm trading. Started with £10,000 yesterday. So I probably won't be trading the FTSE and the DAX, so we'll just focus on the Dow and the Nasdaq. And as you can see, we're rallying hard ahead of the open. Although you have to see that in the context of where we were yesterday. So there we go. Markets are bullish. So there we go. We're off to the races. I do that more and more in really strongly trending market. Just keep an eye on the retracements, because it just seems like such a great way of finding an entry point in a strongly trending market. Anyway, we'll go through that in the lessons that I prepared for today. So while we are watching the charts, I'll show you the open from yesterday in case you don't know. The market's opened here. This is a 5-minute chart. We had a decline and then a big push up. And I bought the first retracement here, and that turned into a losing trade. The best that I ever was in profit by 40 points. Perhaps I should have moved my stop loss up, considering my stop loss was 70 points, but I didn't. But anyway, so here's the open for the Dow yesterday. So now we're just waiting. I'll show you the opening for the Nasdaq as well. This is a 5-minute chart of the Nasdaq. This is the open. Big push up at the 5-minute. Retracement. Push higher. Would you believe it? We bought right there. Right there. And at its best, I think I was about 110 points in profit, and I got 0 out of it. Moved my stop loss to break even, and I got stopped out here. Yeah. So anyway, so that was the opening in the Nasdaq yesterday. This is the opening candle. Slight retracement, about halfway down the candle. So there's 2 ways that this could be interpreted, this price action. One, we can interpret as we've gone above the high, so we cleared out stops above this intermediate high, and now we're headed lower. Alternatively, we can interpret this as a buying opportunity because we're trading back into the range. I'm going to do something that, not that I want you to believe that I'm a Fibonacci fan, but I'm just curious to see because I'm really not. Generally, I am not. And it's not like we've been that bit strongly either. It's just sort of keep an eye on what works and what's not working. At the end of the day, Fibonacci is nothing more than a number. But it is interesting to be a buyer below the last 30-minute candle, which was at 21,546, and I would probably have a stop loss at 490. So I'm going to buy the Nasdaq here. See if I just want to have a slightly better fill. Here we go. There we go. I'm buying the Nasdaq here. You should be able to see my fill here. Okay. So I'm buying just below 30-minute low. It would probably also be the hour low. So here's the hour low. See if we can get some buyers in at this trading range here. Probably do not need a stop loss 100 points away, but I will attempt to move it as quickly as I can. It does feel like quite a momentum move lower. So I hope I haven't misread this. We'll see. The Dow is comparatively much stronger. Normally I would trade the Nasdaq in £4 a point, but I'm just opting for slightly bigger stop losses and smaller stake size. So essentially just trying to buy into a retracement. The low here is 525. If you remember, yesterday Nasdaq had at its second candle was we had a big push up and then some hesitation, and then it pushed higher. Let's see. I'll show you what it looks like on the daily chart. So Nasdaq actually continuing to fall, and quite strongly so. So that interpretation here is either we are going to go above, and we just cleared out the stops above here. Unfortunately, that does pave the way for a trip all the way down to 70, and it actually looks really weak. Well, context here is that it's a gap up situation. I'm 20 points offside. The Dow is a lot stronger. There's the 5-minute in the Dow. I don't know if you know this, but this broker actually got some indices called differentials. They're quite fun to trade. I'll show you. Basically, you can trade the you can trade the Dow versus the Nasdaq. You can trade different things: Dow versus the Nasdaq, Dow versus the FTSE Dow versus the DAX. I've done quite a lot of research in trading these indices against each other. Anyway, you could say you could just trade one against the other, but here you actually got the advantage of quite a tight spread. So, yeah, let's not confuse people. Excuse me. So, keeping an eye on. And by the way, I sort of had a target of around 40 in the FTSE, and I took profit at 39. I'm glad to see. I took profit on 75%. I thought, just on that off chance that we're gonna get a really big rally, I want to keep a little bit, even though my price objective was met. So now it's going to be interesting in the Dow, because we're getting below prior bar low, and I'm curious to see if there was any buyers stepping up here. So the Nasdaq is, probably see if I can move the Nasdaq stop loss up a bit. So I'm going to change the time frame. See, okay, so what's the so keep an eye on the Dow here at prior bar low. I'm going to take profit here in the Nasdaq, closing for 30 points. I'm keeping a little bit eye on the FTSE and the DAX as well. Just, I know this is new to you, but just please remember that I'm not trading here with you on Wednesdays. Excuse me, I got a little bit of a cough today. So I just want to do something. Interesting. I dismissed and stopped using Fibonacci as a trading tool in 2017. But recently, when I want to attempt getting in on board a move, I find that retracements of 38% is a relatively safe place to enter into what you perceive as a strong trend, but it has to be a strong trend. So while we're waiting, perhaps I could go through some charts with you. I think if you look at the 5-minute chart in the Dow, you will notice we're coming down to these lows, but it's a good idea to swap out over to a 30-minute chart and see, well, we are touching the 30-minute chart low, because that often is a sticking point. So if you are bearish, the bears will struggle to push through the lows of a bullish 30-minute if the trend is well and truly up. So right now the low of the last 30-minute is 823, and we went 824, kind of trading at 833. And by the way, and this might be worth just mentioning, I'm trading with, as you see, the broker here. This broker that you're seeing here is something that isn't available in America. It's pretty much available everywhere else in the world, but America has quite a strong lobby, and the CME and the CBOT and NYSE, they're very fervent believers in not letting leverage trading, high leverage trading, enter the US markets, which is kind of ironic because pretty much anything else goes in America, just not leverage trading. You can be trusted with guns and whatnot, but you're not trusted with leverage trading. Go figure. Sorry, America. Meaning with only love in my heart. I had a great time in America last year. I really do hope that I will be given an opportunity to travel. I was in Florida and Las Vegas. Wow, just had such a great time. I really do like the grandiosity of America. Fantastic. And the hospitality. Anyway, I am reminiscing. Sorry about that. So, but anyway, so I am trading a instrument called CFDs, which is to me a far superior product to your traditional futures trading because far higher leverage, tends to be tighter spreads. So, for example, I'm trading the Dow on just a basically 1.5 point spread. I trade the Nasdaq at 0.9, but I don't pay any commission charges at all. I can trade odd sizes. I can trade 200. Obviously, that depends on how much money I have in my account. I can trade 0.5 if I want. So that's why I like trading CFDs. Perhaps we could just take a look at some of the things that I prepared, because I would very much like to show you yesterday. Because when I was going through my trades, I was disappointed with my entry. You know, after the fact, I could see what I was trying to do, but I was trying to buy into a bull trend that I had already had 1, 2, 3, 4, 5 strong candles, and had just gone above a double top. I got in at 22, which was a decent entry, and the market went 56. But when I look at this now, I realize probably should have moved that stop loss up sooner than I did. And as a result of it, I did move the stop loss up, but only about 30 points up rather than all the way up. Yeah. But I'd like to go through some of the things that I saw subsequently after we left each other, because there's some setups here that I really do like. The first thing I want to point out to you is that when I opted for the entry around 43,022, that was a 38% retracement just of this push here. And I thought, well, if that's going to hold it, this is as good as entry as any on a very strong uptrend. But I wanted to show you the same kind of pattern a little bit early on, because this retracement here, and you don't see it so well on the 5-minute chart, but on the 10-minute chart, you see it clearer. The push from here to here, the push from here to here was I'm waffling, from the push from here to here, we saw a 38% retracement. Please don't think that I'm a Fibonacci trader, because I would not classify I'm a pragmatic price action trader, and I'm just making observations and keep trying to expand my repertoire. What I wanted to show you is a pattern that I have traded pretty much without fail since 2006 when I discovered it, and it's essentially a market that goes below and clears out the stops below a congestion zone, ideally with trend. And what you see here is a market that trades below the range. That's what you see right here, and then closes above the high of this bar that has taken out the lows. It goes by many names, such as Steve Neeson, the candlestick man. He calls it crack and snap. ICT, I think, calls it liquidity something. Don't know. Can't quite keep up with his vocabulary, but I think what he means is that the stops are cleared out below, and then we reverse. It's almost like it's just a fake machine. I'm trying to think. David Paul, Dr. David Paul would call it lost momentum. The market lost momentum below, and you see a strong reversal. In fairness, David Paul would probably also give it some sexist name, like, I don't know, Eva Mendes, Serena Williams, Halle Berry, you name it. And then Guilty Ivy often would give our trading setups names, until one day we got a letter from Wilshire Boulevard in California, Los Angeles, which was from Halle Berry's lawyer saying, please refrain from using her name. Okay, there we go. Better not. That's a true story. Feck, it's a true story. I swear to God. So this is what it would look like without what happened next. And the way you would trade it is you would wait for this candle here to close above. And at that point there, you can have your long entry. Some would jump the gun and trade above, but that depends on how aggressive you want to be. The more aggressive you are, the smaller your stop loss, but perhaps the less chance you have of success. If you buy up here, obviously you have more risk, but you have more confirmation. And this is what it looks like. And then up here, you will see the kind of the same pattern. You see this reference high here. Market goes above that high, makes a micro double top. But you see how this bar here closes below the low of the highest bar. Same pattern as this one here, but just in reverse. And that sets in motion. This is on a 5-minute chart. I want to show you the same pattern on the 15-minute chart. And here it is. And this is what I traded last night, sadly without you. But at that point I had stopped streaming. And of course I closed it right there. No, I didn't. Of course not. But I did add a few times. By the way, talking of adding, this is the hallmark of a quality trend where none of the prior highs goes above. And if they did, if you are in a strong trend, it tends to always be a sell short opportunity. It certainly was here. Okay, looks like I was right about my call in the Dow. You're probably watching the Dow as well, but that 30-minute bar did hold. Let me just finish, because I strongly advise you or encourage you to keep an eye on the 30-minute chart, because it especially once the market has matured about 2-3 bars into the session, you tend to, if you do get a close below a 30-minute, it does tend to create momentum. But you'll see that here we don't close below, we just tap below. And here we close above and momentum. Okay. Close above, but then it's so late in the day that the day is over. Let's go through Nasdaq. This is the 5-minute chart of Nasdaq. This is the pre-market. Here's the open. I think this is the open. And then my entry here, it was a decent entry, I think. It was basically what we call a buy below a prior bar low, but you don't see it so well on the 5-minute chart. So I put the 10-minute chart into this bracket here, and you can see how I marked this negative bar here, and we bought right there. Sadly, no thanks to my skills, I got nothing out of it. I bought it at 595. Ooh, I bought it at 595, and the market went all the way up to 700. So I was about 100 or so point in profit, and I got nothing out of it. That was not good trading. And here's a 15-minute chart. You'll notice that this is the highest bar here, and we close below that highest bar right there, and that sets in motion a decent move down. I think that's it. So that's what I wanted to. No, I don't want to see. So that's what I wanted to teach you today. Okay, so let's just keep up with what's going on. The Nasdaq is playing silly bollocks. No, not silly bollocks. Silly bugger today. And so is the Dow. So if I go back to the 30-minute chart, you can see exactly, hopefully, what I meant by the market taking out the lows but not tapping. And if we were to close above this high here, then that would set in motion for new highs coming in the Dow. So that's just about to happen now, I think. The high is, oh, something has just happened. Did you see that? I didn't expect news. Did I miss some news? Apologies if I did. I thought I'd check that. 1 second. Let me just check. Yes, there was ISM. Sorry about that. That missed my attention. Perhaps I was quite lucky there. But notice, and I always keep an eye on this, how is Europe reacting? And Europe isn't really reacting at all to that news. But the Dow is pushing strongly lower. I want to make sure I got no open positions and no open orders. So good thing that I didn't buy the Dow there, although I wouldn't have done it if I knew there was numbers out. I imagine there's a few traders caught on the wrong side of this. So here's the Dow. That's a very strong reaction to ISM. The thing about ISM is you can use the rule of 4 if you want to. Considering how strong the Dow was, I don't think an ISM number is going to change the trend. I could be tempted to be a buyer here. Nasdaq, on the other hand, different. So for those of you who don't know what the rule of 4 is, you are welcome to access the resource channel, and there you'll find a file called the rule of 4. I usually use it for FOMC, but it could also be used on news releases. The essence of it is after a news release, you wait 4 5-minute bars, and then you bracket that 4th 5-minute bar, and you go in the direction of the break. That's the essence of it, which is the same could be said for pretty much many of my entries. But let's see how much weakness there is in the Dow. So the school run triggered at 8:08. That would have been a good trade. I didn't take it. I imagine in the Nasdaq it would be the same theme. Yeah. when I stop streaming, if I place trades on this account here, I will obviously post it in Telegram. So I don't know if you noticed, but if you look at the 15-minute chart yesterday in the Dow, 1, 2, 3, 4, 5, 6, 7. And this bar here is a brunch break, and it saw a 150-point move in the Dow. And if you had the courage to flip the switch, it would have benefited you as well. But this was after I left the room. So just to recap, I bought the Nasdaq early on a deep retracement below the range, and I got about 30 points out of it. And since then, I haven't found anything yet. Some of my setups have triggered. I probably just need to get the hang of the talking bit as well as the trading bit before I am pumping on all cylinders with my setups. But I do enjoy the teaching. It's incredibly enriching to be able to talk about your setups and pass them on. I like it. And Trade Live is trying to build a £10,000 account. That's fun. Today has been a decent day. Yesterday I had 10,000 and it went down to 9,850. And today we've gone from 9,850 up to 10,265. So what's that? A 4% move? Yeah, that's good. Okay, just a reminder, this is going to be the norm pretty much. The markets are open tomorrow, but I'm not trading publicly. I'll be just trading for myself. I may post things in Telegram, and you're more than welcome to contact me to be a member of Telegram. You'll find the description of how to contact me in the description under the YouTube heading. And then Thursday, it's a Memorial Day in America. And I have been reliably informed that the markets are closed. So I think I'm gonna call it. I'm feeling a little tired today. I did some incredibly strenuous weight training, and I'm feeling it a bit in my body today. So I'm happy just to leave it at this, knowing that we made some money, and that was good. I think actually I won't close my FTSE. I'll allow it to run, hopefully. Hopefully this is just a retracement. So, to Americans, I hope that you have a pleasant Thursday in memory of Jimmy Carter. And to the rest of you, I hope that you have a safe trading day Wednesday. And I hope that you will review the material posted here and this morning, because I think that'll benefit you. Okay, you look after yourself and stay strong, and I will see you Thursday morning for European trading. Although I wonder how busy how busy Europe is going to be if America is closed, but we'll see. Thanks a lot and take care of yourself. All the very best. Bye-bye. And bye-bye.